Hey traders, this is just going to be a quick tip or a bit of a tip to sort of stack the odds on your side when you're trading the S&P. I know a lot of you traders out there are trading the S&P E-mini right now, and I just want to give you a bit of a tip on how to stack the odds on your side even more by using other markets in connection or in correlation. You see, what happens is, right now we're looking at a bond chart, okay? We're just simply looking at a bond chart here, ZB09. And we can see with this bond chart here that we overall been stair-stepping high, and been blasting up. Now, when you view the S&P 500, we see that the overall market's been slowly stair-stepping down, right? Or it's been overall sideways, but mostly weak. And I've been having big drop-down movements, and then overall sideways. Where you can see the overall bonds has been going up, sideways movements up. So what we can do here is that the bonds will generally go in opposites to the S&P 500. Okay. Now the thing is with the S&P 500, it trades a lot more, so it's really hard to compare. But just watch it, okay? Just watch it. When you're actually trading the S&P 500, have a bond chart up and say, okay, if the S&P starts cracking hard, the bonds are likely to buy it really quickly. And if the bonds are likely to drop, then the S&P is likely to go up. Okay, so put it together. So how can you use what I've just taught you just then? Well, what you can do is you can have the S&P chart up, the bond chart up, and if the S&P looks like it's going to break down, but the bonds doesn't look really strong, well then that might be the extra confirmation you look for to get into that trade, right? You might be looking for a drop in the S&P. So you're looking for a bit more confirmation. So you bring up the bond chart, see if the bonds look like it's going to explode, look like it's going to take off. And by having those two markets, because generally speaking, when you see the S&P dropping, the bonds will start to rise up. And when you start to see the S&P rising, the bonds will start to fall down. Okay? So when you're looking at these two connections, these two correlations of these markets, you can use them for a added probability, because at the end of the day, we're only after probability, right? So when we look at this is the bond chart here, and we can clearly see that this whole period through here ran up, ran down, ran up, ran down, ran up, ran down, and then had this massive explosion up, overall sideways, then up. Now, once again, the bonds doesn't trade as many hours as the S&P 500 does, but if I bring the S&P 500 chart up, this is basically it here, and you can see what's happened here. The S&P 500 is spending more time going sideways through here, and then going different color sideways, and then spending a lot more time going down, right? This bit here going down as well. So what's happening here is, once again, just watch it, okay? Watch it, keep an eye on it, because what happens is you'll see the bonds start to take off, you see the S&P start to drop, and it's like, this is what's likely to happen. Okay, so keep an eye on that, keep an eye out for that, and make sure that that you continue to keep an eye on both of these charts, because this S&P chart and the bond charts, it can really give you the extra confirmation that we're looking for, right? Sometimes we're like, I'm looking for a bit of a longer term trade, 7, 8, 9 points on the S&P, and when we're looking for that, then what will happen is sometimes the market will give us a false signal. But by using the bonds, if we're looking for a bigger trade, when we're looking for bigger trades, we need the outer force, right? We need some bigger things. We need like the bonds, and we need the S&P. We need a bigger momentum, right? Not just the small time frame charts, but the bigger charts, 60 minutes, dailies, and stuff like that. Especially if we're trying to go for 8, 9, 10 points in a trade in the S&P. Okay, so use the S&P, use the bond chart over here, and make sure that you use them together in correlation to make sure that you're stacking the odds on your side even more, okay? So the tip for today is look at the trading bonds, or look at the bonds charts, and look at the S&P charts. As the cash is moving open with the S&P, you'll notice the bonds and the S&P generally trading opposites, so you can use that for your overall trading and high probability. So thanks again, guys. My name is John Howe. Come down to my site at tradinginvesting4u.com. Come down. You can come down, you can sign up, you can get a free video there, a free 15-minute video I have there. I have a free trading room, plus I'm going to give you a free membership to my Invest for Profits membership. Come down to tradinginvesting4u.com, sign up to the free membership, sign up to the free trading room, and come in with all the other traders that are there as well. So you go and enjoy it, log in, and I'll see you in the trading room. Thanks again, guys, and I'll speak to you soon.